You have associations that are self-managed in the sense of you have a typical officer structure. You got your president, treasurer, secretary, and then you have associations that actually deal with the software companies and they deal with a property management company and will help them streamline their operations as well as make things a lot smoother when it comes to keeping track of association expenses or association related events.
HOA Insights is brought to you by 6 companies that care about board members: Association Insights at Marketplace, Association Reserves, Community Financials, Kevin Davis Insurance Services, HOA Invest, and the Inspectors of Election. You'll find links to their website and social media in the show notes.
Welcome back to HOA Insights, Common Sense for Common Areas. I'm Robert Nordlund, and I'm here today for episode 128 with my neighbor from the CAI National Trade Show earlier this year, Gavin Nelson from Merchants Bank. Gavin has over 20 years of experience in banking and finance with different banks and in different roles. And we have him here with us today because managing an association's money is a critical function for board members. Now, I'm not just talking about planning, and in my world, that means budgeting enough income to offset your expenses, but collecting and actually managing the association's money. Last week's episode 127 was another conversation with regular co-host Julie Adaman on management and people and culture and community association boards and the intersection between being a great board and having a great association. So don't miss that one. What you do, how you do it as a board significantly influences the function and culture of your association. If you missed that episode or any other prior episode, take a moment after today's program to listen from our podcast website, hoainsights.org, or watch on our YouTube channel, but better yet, subscribe from any of the major podcast platforms so you don't miss any future episodes. Well, those of you watching on YouTube can see the HOA Insights mug that I have here. Get rid of the shine. It's one of my favorites, puts a smile on my face, that I got from our merch store, which you can browse through from our hoainsights.org website or the link in the show notes. You find we have some great free stuff there like board member Zoom backgrounds and some specialty items for sale like the mug. So go to the merch store, look around, download a free Zoom background, take a moment and find the mug that you'd like and email me at podcast@reservestudy.com with your name, shipping address, and mug choice, mentioning episode 128 mug giveaway. And if you're the 10th person to email me, I'll ship that mug to you free of charge. We enjoy hearing from you, responding to the issues you are facing at your association. So if you have a hot topic, a crazy story, or a question you'd like us to address, you can contact us at 805-203-3130 or email us at podcast@reservestudy.com. This episode was prompted by Sandy from San Francisco, who asked, I'm new to the board of our small, older association. We have a checking account from the prior board, likely at the same bank used by a board member. Is this normal? Should we be looking for something better? And Gavin, it's emails like this that made me want to get a banker on the program. And so, Gavin, welcome to the program. And how would you respond to Sandy?
Robert, thank you so much for having me. Pleasure to be here. Honestly, I would simply say, first of all, Sandy, congratulations on joining your board, being put on your board, getting a chance to serve your community is an amazing experience. Secondly, at the end of the day, being a new member, she's going to want to take a look at what they currently have. She mentioned the account in itself and maybe being at a bank with a current board member. That's not out of the norm. That's very possible just because people tend to want to do business where they currently do business comfortably. So if that's a bank they use personally, it'd be a no-brainer. Well, my bank treats me great personally, so my association account should be there as well. So that could have came on the recommendation of that board member. But secondly, she talked about, or she asked, if there's any issue with that or should be doing anything else. I would say just like anything else, you want to do kind of a checkup or a check-in. Take a look at what they currently have in this association, and then don't be opposed to looking outside of different, products and services that other banks may have that have to offer. It's just like anything else.
Yeah. What does that begin to look like? We want to encourage our boards to not just go with what has been done before, but improve the board protocols, improve the board standards, improve the board's communication, improve the board's banking. So what does better look like?
Gotcha. And that's a great question. So I think one of the biggest the disconnects sometimes is just let's say the infusion of technology, updating it, with a bank that maybe has some current features of software that they use to make that things easier, make life easier for that association. And also just sometimes comparing banks, one bank can do as kind of limited on what they can offer as far as their products and services. And some banks have a plethora of products and services that they offer that can fit the niche of the HOA space or the homeowner association space. They only would know that through doing a little due diligence to kind of see what's out there. There's a lot of banks that are in the space. It's just a matter of doing a little bit of research to find out what's out there.
Well, attempt me. If I'm a person and I have my family money at Wells Fargo. That's our checking account. I got my debit card in my wallet somewhere. How is the world of community association banking different? Where do you start? You said make life easier. And I'm sure our board member audience heard that phrase and they're like, get to the point, Gavin. What do you mean make my life easier? How can you make someone's life easier?
Absolutely. A couple different ways. One, I mentioned technology being a key component. Having a bank system that offers the ability for real-time processing, whether that's payment processing or just viewing your statements as an association or collecting what they call, a bulk statement to kind of consolidate their monthly statements. That also comes down to the bank you work with, the structure. Some banks are highly in tune to the homeowner association space when it comes to how they service, meaning they have dedicated bankers that can be assigned to that association and kind of give them that one-on-one service, that little bit more time and attention. And then there's some banks that have a lot of automated systems, even some that have AI integration, where there's a lot more automation. And so as a consumer or as an HOA board member, you're going to be able to go look at things on your own and kind of be self-sufficient and not necessarily have to deal or want to have a handhold experience if you don't want to. But different banks offer different things. Some do things better than anything else. I would equate it to be, a little bit of preference, but also some banks can outperform other ones. I mean, there's a bank on every corner and a lot of banks do very similar services. What typically sets institutions apart are the people that work there, the supporting cast or supporting systems in place to make it a more efficient experience as well as to make it a more productive experience, meaning what's in it for the client at the end of the day. Those are kind of things that are outliers that set it apart. So that's why a client could say, I love my bank. And I know I love my bank for these specific reasons and how they treated me. And you could be talking with a peer and they can have a completely different experience based on their banking experience, despite the fact that they're with a bank. Those are kind of some of the different features that you kind of see in comparison if you were comparing.
Okay, well, let's presume, okay, we got Sandy here. She's the new board member. And let's say that she's there. They said, hey, Sandy, how about you be treasurer? And she said, okay. And so now she's got this. And let's say the last person was Joe. And Joe loved his, and let's say, corner bank. And he liked the way they served him. They did, hello, Joe. And, they welcomed him. And that's a nice thing. But
sure,
if Joe is walking in a couple times a week with checks, that seems like a lot of time and energy. So are you talking about a bank that would actually receive the checks and deposit the checks? Talk to me about making life easier.
Got it.
That kind of stuff. Is that what community association banks can do?
Yes. So great contrast. So you've got a client that has the comfortability of bringing checks to the actual bank, and that may work for them, but that also has risks that are attached to that also has an extra task that's involved, of physically getting those checks to deposit. You have institutions that will offer, check scanners that are available to the client to be able to just be at their office, their HOA office or their property management office.
So they just
scan their checks. You got it, right from the comfort of their own home or their own office. And that goes right into the bank system and they're processed in like a physical deposit that they would bring in. So that's a perfect example of something that means that would save, time, money, energy, resources to be able to do that. If you're collecting, usually the association could be, let's say 150 to 300 homes, or condos or townhouses or however the structure is. That's a lot of payments. Some payments are going to come electronically. Some are going to come in a physical check form, depending on the client's preference. That's a specific feature you just mentioned of something that would make the life easier for an association if they wanted to go from check depositing to just check scanning. Thus, that alone would save the time, energy, and money.
Yeah. Well, let's take a third step. So let's say Joe was getting checks, whether he walked around, and again, I think Sandy said this was a small place, so let's say 10 units. So maybe he walked around, or maybe they put the checks under his doormat or something like that. So not too much, but there's a lot of people now that don't write checks, and we, in our family, we don't go through checks like we used to. Most everything is automatic. So community association banks that say, hey, you can bring checks in. We can take credit card payments. We can take, electronic funds, automatic, things like that. Debit
Absolutely.
cards. Is that another feature? So Sandy can be the absolute hero by announcing at the next board meeting that, hey, if any of you want to pay by credit card and get points, or debit card or whatever, we can do that beginning next month.
Exactly.
So that sounds to me like she's a hero.
Agreed. And that's a great segmentation to the electronic features of what you can do as well. Like I said, depending on the bank's capability, you can do that in 2 phases. One is a simple, just remote deposit, whether you just want to take a picture of that item and send it in directly. But even more so, a lot of the banks now offer the ability for that client to simply just send those checks in. They can do it on a generalized system where it's scanned in, like I mentioned before, and then that person in the office just simply processes that if they want to do a payment. There's software that's actually integrated as what especially over the last few months, I've done a lot of research on the software integration piece. And so there's multiple software integration that work alongside with the banks. And so they set up a structure where you might make a payment for HOA. You don't have to write a check. You simply go on their portal, make a payment, and it's all electronically processed. And everything is available in that same portal for the client. So that would make Sandy a hero. That's a leap and bounds growth. Going from physically walking checks in to, let's say, scanning checks, and then getting past scanning checks and say, we're going to use the portal and integrate some software and just make our payments right directly to our HOA company and our bank. So
my brain is spinning with how Sandy is bringing her association into the future. Okay, so that's good. So she is gone from, in her little association, or Gavin, like you said, it could be 100-unit association,
there you go,
where they're slipping checks under the treasurer's mat or whatever. And now they can, Sandy can perhaps skip going to the bank. She's got her check scanner, zip, zip, zip.
Yep.
Or she can tell people that send their checks directly to the bank, or they can pay with a credit card with this protocol, pay electronically with this protocol. Boy, okay, yep. That's all deposit side. And I imagine the bank, like you say, will have the software to say, I got checks from these people on these dates. And so you know who's current and who's late. And so on the 10th of the month, you can draw the line and say who's in and who's out. Okay.
You got it.
And then you were tempting me also with payment type stuff. So instead of Sandy writing checks, there's software integration with whatever they're using. It could go anything from something generic like QuickBooks, I would imagine, to community association industry specific. And I'm thinking at the CAI trade show, how many software programs were there? But there's HOA management software that has integration, and that would be so cool to just, I'm closing my eyes because Sandy can close her eyes, and the checks go to the bank, the transfers go to the bank, the deposits happen on the 10th.
You got it.
She looks and sees, or the 15th or whatever it is, she looks and sees who's in, who's out, and she has a wonderful association. So all 10 checks came in, right? And then she says, okay, I'll pay the bills. And she looks and she can just type in, pay ABC Electric, pay XYZ Water, the insurance bill, so pay LMNOP insurance, and just right there, click, 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 and she hits enter, or I certify I am indeed Sandy Smith of HOA, blah, 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 and the bank pays those people. And Sandy has not written a check. She has not touched a check. Cool. Okay. That is a world of difference from Joe. Nice Joe. And he's been doing that for 8 or 10 years, who likes the people at the bank. He stops by the bank on his way to coffee or the golf driving range or whatever it is. I'm stereotyping terribly. But we have a well, that's it. We have a world of difference, and we want our audience to be aware of what's out there, what can
Sure.
make their life easier. And it's so easy just to do things the way you've done them before. Okay, if in Sandy's position, and her brain is spinning because she's listening to this program and saying, "What? You can save me going to the bank once a week and ordering checks and all that kind of stuff." Is this a 1-month transition, or is this a 6-month transition once she's identified a bank like Merchants Bank that just
Sure.
does this?
I mean, I would say you want to give yourself, rule of thumb is you give yourself 30 days to make a transition, especially going from, let's say you're going from one bank to another bank, for instance, or you're upgrading from just doing the physical labor of bringing the checks in to going to software and enhancements. You want to give yourself 30 days. But as far as the banks can have a pretty fast turnaround. Imagine the software integration being just that bridge in between, where everything in between that would typically cause, labor on the board or on the association. Now that integration is the middleman between them and the bank. And so what that offers, you got it. What that
Just
offers is
happens.
all that it just happens a lot smoother there. And then now that HOA member, that treasurer or president, whoever's doing the processing, they deal directly with through the software to look at everything, to transact everything, and then that software then communicates with the bank. That's kind of how that works. There is one element that you add to that loop, because you have associations that are self-managed in the sense of you have a typical officer structure. You got your president, treasurer, secretary, and they can directly deal with the banks. And then you have associations that actually deal with the software companies, and they deal with a property management company, which is where that association says, you know what, we don't want to do a lot of the compliance. We don't want to do a lot of the legal stuff that we have to typically do year in and year out. Let's go and have a company help us streamline this. And typically it's a property manager that will come and play and will help them streamline their operations, as well as make things a lot smoother when it comes to keeping track of association expenses or association related events. It's not just necessarily just the association payment. That could be everything from repairs. That could be maintaining and the processing of vendors. That could be replacing something, let's say for a storm damage, or maybe just a community upgrade or overhaul for the community. That could be an upgrade in the amenities. All that is facilitated and helped through the software, and then also a property management company that could be a part of that. So there's a couple of different layers of how it could go, but each association has the ability to act independently or go through a property management company if they see fit to do that. That's what I've kind of seen trending of recent. Years ago in the association space, I would see a lot of independent, board members and or officers that would come to the bank together physically, and then we'd open an account. We would set up their accounts however their preferred way was, and then do their transactions from there and treat that account just like a business account, like anything else.
Okay.
The recent update is property management companies actually are able to work alongside those associations and help them manage and facilitate that. And the property management company sets up that relationship with the bank. There's some nice added pieces there to help the boards run a lot smoother, as well as to add value and streamline what they currently do.
Okay, I'm writing a couple of things down. Time, savings, and transparency.
And if I could add anything, Rob, of something I didn't mention that I should have mentioned from the top, because it's a very pivotal point. There's a difference in what institutions can offer from a rate standpoint as well. A big part of the association space is returns on their money. Traditionally, you have your operating account that's transactional, and then you have a reserve account or multiple reserve accounts, depending on how many associations they are. And then a good return of interest is great on the reserve accounts, because those monies are typically used for, like I mentioned earlier, updates and enhancements to the community, amenity upgrades, so just simple storm repairs, just whatever the community needs. And also predominantly, I think all associations or whether it's a condo or townhouse or just a co-ops, they typically have to have, it's mandated that they have to have reserves in place to cover certain things about the community specifically that are going to be needs. And so why not have that money, earn a great rate of return if you can, but of course that's going to vary depending on where you bank. That's an important factor as well.
Gavin, with my background, of course, I was going to get to reserves. And so I love that the conversation has gone this direction. But I want to go further down this path, but that's a wonderful segue. But let's take a quick break now to hear from one of our generous sponsors, after which we'll be back with more Common Sense for Common Areas.
Hi, I'm Kevin Davis, the president of Kevin Davis Insurance Services. Our experienced team of underwriters will help you when you get that declination. We provide the voice of reason, someone who will stand by you. Our underwriters bring years of knowledge to our clients that can't be automated by technology or driven by price. As a proud AmWins company, we bring true value to your community association clients. We are your community association insurance experts.
And we're back. Well, just before the break, Gavin started talking about reserves and my eyes started to light up. One thing I like to tell my clients when they are talking about reserve interest is that every dollar they get from a bank like Merchants Bank is one less dollar that they have to put in to get that new roof. And I just love hearing a bank that has competitive market rates. So, Gavin, people will listen to this program live. They'll listen to it in arrears. But as we're recording, what kind of market rates is Merchants Bank offering at this time for reserves on deposit, savings accounts?
Beautiful, beautiful. Thank you, Robert. Merchants Bank is, I have to say, and not just because I work for the company. Of course, everybody will say I'm biased, but the reality is that we are an amazing bank when it comes to interest. It's simply what we've done for quite some time. For example, right now in the rate market that we're in, which if you check just the Fed rates or you just check just bank rates across the country, we're going to be the top number for those as far as production and on what we can offer our clients. Right now, just for a money market account, a liquid account for a client to be able to put high yield money into, we're paying 4.25%. That's an outlier in the industry, and we paid that rate for some time. And we also have a great offering for CDs, and we just have a great system that's built for gathering deposits outside of the association space. I will say there's like I mentioned, there's a lot of banks that have different offerings, but you're only going to find out what those offerings are when you do a little due diligence. And that's what it comes down to. Some people would err on the side of comfortability. They'll stay where they are just based on it's what they've always done, and they don't necessarily do that research. But I wouldn't implore any board member, any association or property management company to do a little homework. And I know that a lot of them do it now, where they look for the best rates. And Merchants Bank happens to have one of the best ones out there, but there are other banks that have great rates as well. So if you're looking for, like you said, that for every dollar you put in, like you mentioned, Robert, it's super important because reserves specifically, yes, they're mandated to be kept, but there's a reason for that. If there's a shortfall with reserve balances, typically that falls back on the community members to find that those funds. And there's a variety of ways that those funds have to be raised. Now, imagine having an account where you've got $500,000 in that account and it's making 4%. Well, that additional interest just goes towards the pot to be able to make those things happen in the future if there was a shortfall. I'd rather more money in your pocket than the banks, honestly. And our bank believes in giving the highest percentage back to our clients.
Yeah. Well, again, this is wonderful. We talked about time savings. We talked back and forth about that. We talked about transparency, and you added the management company element to that instead of the checkbook being at one place, all of a sudden you have the software that's the accounting software. And so the treasurer can check, the manager can check, the president can check, everyone can maybe print their own summary for the upcoming board meeting, those kinds of things. Transparency is great. And then you've added the other element of savings. So you had the bank literally acting as a partner, giving the association money. And that warms my soul, because how hard it is to collect sufficient reserves for everything that's coming up. Now, talk to me a moment about the $250,000 FDIC limit. What do board members need to know about that?
Sure. So your typical threshold for most banks is going to be $250,000 as a minimum for FDIC coverage. I would implore everybody, if you go to if you want to go to bankmerchants.com, our website, and check it out. We do have a FDIC calculator that's available there. But also, if you logged in and looked at the actual FDIC website, there is a calculator on there as well, where you can actually put in your specific numbers that's specific to your association, and you can kind of see what your coverages are. I know a lot of banks have this tool, but we have it as well at Merchants, which is a relationship with IntraFi, which is a company that offers a cash service, which is like a cash sweep account, which allows a client to have over $250,000 with us and have that money still be completely covered by the FDIC. So that's something that we have. the majority of associations, to be honest with you, reserves have high balances. You could look at a minimum of, let's say, 250, and then you could go as high as a couple $1,000,000. And so it's super imperative that those funds are typically covered under FDIC just for security, peace of mind by that association. It's in the best interest of the association, and the property management companies act accordingly. They want to make sure those funds are covered as well. So that's something that Merchants offers, but I know other banks offers it as well.
Yeah, well, I like seeing our clients have board members are fiduciaries, and so they need to care about the safety of the assets that they're holding for other people. So I like my clients with less than $250,000 knowing that it's FDI insured, and I like knowing that you've got a bridge so that when their reserves grow, they're preparing for a roof project. As their reserves grow from 200 to 250 to 300 to 350 over the course of a few years, Merchants Bank, and I imagine your competitors also have bridges so that it's not like everything they have is uninsured. But I want to encourage our listeners to make sure that wherever your funds are, if you have them in a local bank, your savings bank, you may want to double check to make sure everything above 250 is indeed FDIC insured. So
you got it.
Write that down as an asterisk.
Great point, Robert.
Okay, so you've got that. We talked about the roof project. What if you have a $500,000 roof project and you've only got $250,000 in reserves? That's a problem. There are banks that do lending. Is Merchants Bank one of those community association banks that can manage a loan to an association?
Absolutely. There are banks that have lending services that are available to associations. Typically, if there's a shortfall, it's in reserves, or there's a project that has to get done, it's usually planned out for, so that gives the association a little bit of time to acquire the additional funds, whether they raise them, via an assessment to the actual community owners, or they go to a bank, a financial institution like Merchants or anybody else, and request a loan product that they can take advantage of that will bridge that gap.
Okay.
It can be done a variety of different ways, whether it's through some type of line of credit, or it's done as just a straightforward loan that's kind of specific to the need. And when I say that, is the loans that an association will need are a lot different than a loan that an individual would need or just a business would need. They're structured a little bit differently. And so they are a case-by-case basis. There's a lot of factors that go into that. But the reality is that you want to be at a bank that you want to not be afraid to ask that question and have someone actually be able to work with you hand in hand. And that's a big disconnect, I think, as my research has found in the last numerous months. There's some institutions that you call and you may not necessarily be able to have someone walk you through that process.
Yeah, they just don't do it.
They just don't do it. And you have some institutions where you've got a rep that will take care of you and literally walk you from beginning to end to make sure you get the resolution that you need, or at least point you in the right direction. That's a little piece that sets institutions apart as well. So that's something that you can get from different banks, but also our Merchants.
Yeah, that would be a nice additional question to ask on your interview checklist as you're looking at potentially a new bank. I like the idea that Sandy, again, in our the person who launched this entire episode, she could wonder, or as she's the treasurer for a year or so, she knows, okay, our delinquencies are low. You've seen our deposits. And basically she's built the reputation of the association in the eyes of the bank. And the banker says, oh yeah, Sandy, I know your association. I can look at your numbers here. And yes, with your low delinquencies, with an upcoming roof project, I see how much reserves you have. Boy, I would imagine that could be a really easy process if you have the right bank on your side.
That's actually probably one of the biggest fundamental differences with, being that I've been in the industry for a long time. And then when I say industry, I say financial services, not necessarily a super long time in the association space.
I will get to that.
Sure. But nevertheless, I have the experience and I have the longevity in the industry to kind of see the difference, especially between institutions. You have some institutions that are just a bigger old machine. They have certain sectors that bank flourishes in, and they stay in those lanes. And then I've come to find you have association banks that literally have whole departments that are segmented just for associations. And so there's going to be a big difference between the level of service and attention and detail and specified instruction that you're going to get from a institution that's geared towards, hey, how we service associations, and an institution that's a well-oiled machine that has, a ton of business lending, commercial, investments department and segmentation. There's going to be a difference there. but that's up to that association or property management company to kind of find the best fit for them. So I can't emphasize enough how much your due diligence is reliant on that extra work of doing that to look for the right fit for you as an association.
I bet. Well, okay, Sandy got into this probably because she went to a board meeting. She asked some good questions, and Joe and the rest of the board said, hey, Sandy would be a good board member. And they asked her, and she said, what the heck? And so she ran and she became a board member. What got you into this crazy community association industry?
It's funny you described it as crazy. Coming from the private bank space and the commercial bank space, a big part of what I've done for a long time is work with clients and build relationships organically from start to finish, or take care of, manage a book of business, or just kind of be that face and getting out and meeting and connecting with clients on their turf, not necessarily relying on them to come in the bank. So I'm used to going out and get business and, building relationships and watch it turn into from nothing to multi-million-dollar relationship and finding what the client needs and remedying that. And then I'm in a space now where associations are so different in the sense of you've got to find an in, to a point of contact, as whether it's a property manager or it's a board member. You've got to find the decision maker, which sometimes can be a little challenging, right? But also the needs are so different. A majority, when I say needs are different, it doesn't necessarily mean more complex. It just means that the needs are different. Where in the past have offered, let's say, private banking experience, and you get a certain level of experience, you have a certain balances. For an HOA president or secretary or even a property management company, they may say, listen, we just want to have a great partner bank, a great relationship, pick up the phone when we call and have systems in place that will help us make this easier. And even more so, add a good interest rate if you can. Give me that cherry on top to make it make sense for why I want to do business with you. That's another reason why I decided to make the change. Believe it or not, being in banking for a while, and probably most bankers, especially tenured ones out there, would empathize with this. But it gets a little mundane. Sometimes it can be kind of just status quo. I'm just being real.
I know. There's always something new and crazy around the corner in the community association world.
For sure. And then, Jordan, this space, what I love is specifically, my company Merchants, the challenge was I'm in Florida. I'm actually based out of Tampa, and my company my bank is looking to expand and build in the HOA space here in the state of Florida. And so it was a unique opportunity for me to be kind of the face and be able to promote and start with my circle of influence and impact here in Tampa, and then spread that across the state of Florida and see what impact we could, what penetration we could get in the market. So it's been an adventure. It's had its challenges. I'm enjoying every minute of it. And I will say that I love the upside of it, because as I talk to different property managers and board members, there is an opportunity to help, whether it's rate wise or just partnering with them and having them tell me, hey, it's been a while since we got a hold of somebody we could even talk and just bounce things off of a banker. So that gives me hope that, Merchants Bank was going to be able to add a lot of value in this segmentation as I move out in Florida. And that's what's kind of brought me here. And I think that's what's going to keep me here. Not to mention my bank is an amazing bank to work for. Shameless plug, but it is what it is. I love working here, and I don't see myself leaving, to be honest. So this is it for me, hopefully.
Cool. Well, you're taking your time out of your workday to join us on the program here. But again, some more thoughts are triggering in my mind. And you talked about service. It seems like that just beats within your heart. And again, I'm thinking about Sandy, who has made this pitch that you all used to bring in checks, and now we can do electronic payment and credit cards and all this kind of stuff. But she has Fred in unit number 6, who just can't get it figured out. And I bet at a bank like you work at, like Merchants Bank, they can contact their banker and say, hey, can you talk to Fred? Fred can't get his credit card, his $350, $450 a month to work. And that service, even in all the technology you're dealing with, it still comes down to the human relationship and the service. Gavin, a lot that we've talked about, there's much more that we could. I'd love to talk more about signature cards, more on the lending, more about deposits, more about the service, the technology, the integration, that kind of stuff. So we may have Gavin back for another episode in the future. But Gavin,
would love that.
You talked about your smile and the service, and indeed it was your smile I'm setting up at the CAI trade show, and where's our booth? And then there's this guy next to us with his big smile. And I said, I'm going to like this guy. So anyway, that's why Gavin's on the program. He brings a great deal of experience. So Gavin, thank you. Thank you, Merchants Bank, for giving him time during the workday to speak with us. It was great talking to you and having you on the program. Any closing thoughts to add at this time?
Man, thank you, Robert, for the opportunity. It's been an absolute pleasure to be here. I'm very big on just trying to connect in this industry as much as I can. So that goes for all the property managers that are listening, as well as all the board members and officers. My bank is looking to really, spread our wings and make a move in this sector, being able to offer more services and be able to work with associations and property management, targeting initially the reserve space of offering you a great rate of return, to be honest. And we're going to see where we can do to bring you relationships in and add value there as far as a great rate of return. And eventually down the future, we're looking at maybe operating, maybe something we'll consider, but we're in a good position and we're excited about the opportunity. My responsibility is mainly to do that in Florida, but we do have a footprint that covers all 50 states, and we have an amazing back support of our operations team. So we can do anything with anybody in any state. So feel free to reach out to me. You can reach out to me on my direct number, or just actually go to our website, which is www.bankmerchants.com. You can find me on our search engines there, as well as you can email directly at gnelson@bankmerchants.com. So just really excited for the opportunity, and I hope to be able to stay in contact with you, Robert. And then, of course, any listeners, I'd love to connect with you. Feel free to reach out.
I hope you're not overwhelmed with emails. But again, if you'd like to
That'll
get in
be a
touch
good
with... Okay. If you'd like to get in touch with Gavin or learn more about Merchants Bank, again, let me say it again. Their website is Bank Merchants, MERCHANTS.com. And Gavin is gnelson@bankmerchants.com. Well, I hope, be kind. Don't everyone email them today or tomorrow. Spread it out. We hope that you learned some HOA insights from our discussion today that helps you bring common sense to your common areas. We look forward to having you join us for another great episode next week.
You've been listening to HOA Insights, common sense for common areas. If you like the show and want to support the work that we do, you can do so in a number of ways. The most important thing that you can do is engage in the conversation. Leave a question in the comments section on our YouTube videos. You can also email your questions or voice memos to podcast@reservestudy.com or leave us a voicemail at 805-203-3130. If you gain any insights from the show, please do us a huge favor by sharing the show with other board members that you know. You can also support us by supporting the brands that sponsor this program. Please remember that the views and opinions expressed in this program are those of the hosts and guests, with the goal of providing general education about the community association industry. You'll want to consult licensed professionals before making any important decisions. Finally, this podcast was expertly mixed and mastered by Stokelight Video and Marketing. With Stokelight on your team, you'll reach more customers with marketing expertise that inspires action. See the show notes to connect with Stokelight.